Money market facilitates portfolio management. Well, what do you mean by portfolio management? Before going into how money market helps facilitate portfolio management, let us understand what you mean by portfolio. Well, portfolio is a list of assets and liability a person or an investor has in different forms. So, financial assets and financial liabilities comprises a financial portfolio of a person or an investor. To give an example, let's say I have cash in my hand. I have, let's say, 2 acres of land with me, 5 kg of gold with me, right? Silvers, I have in money invested in stock market, mutual funds, treasury bills, PPFs, but I also have a bank loan, right? And there are different liabilities also. All these financial assets and liabilities of an investor, of a person, comprises of portfolio or financial portfolio of a person. Now, once we understand what is a financial portfolio, is basically financial assets and financial liabilities of a person. Now, let us understand how money market helps portfolio management. Well, money market deals with different types of financial instruments which suits to specific risk and return preferences of investors, which in turn helps the investor to create its portfolio by holding different type of financial assets, which also reduces the risk of an investor and enhances or maximizes its return. Now let us take an example to understand how these financial instruments created by money markets create different type of risk and returns, and how by holding a variety of portfolio an investor can reduce its risk and maximize its return. Let's say I have some money as a cash, some money invested in stock market, and there is a new project come up. For that project I need to invest money. But I have already invested money in land, a substantial amount of money. So I have a limited amount of money in the form of cash. What will I do now? I'll go to bank and ask for a overdraft facility. So I'll have some FDs, fixed deposit in the bank, and against that I'll get some overdraft at a minimum charge of 1% per annum. Now tell me, with a rate of interest of 1% per annum, I am able to create substantial amount of money, and still my original FD money has not been utilized. So I have reduced my risk for the new business. And the return will definitely be more than 1% if I run the business properly. So I'm able to pay that OD charges, overdraft charges to the bank, and still able to maximize my profit. So understand, by holding different type of portfolios, that's putting some amount on FD and getting a loan in the form of OD or cash credits, or putting money in stock markets or land. So a variety of financial assets and financial liabilities helps me handle and reduce my risk and enhance my returns. So in nutshell summary, yes, money market in India helps in better management of portfolio. Well, money market in India deals with different types of financial instruments which gives different types of risk and returns depending on investors' preferences. Because of which an investor now can hold a wide range of portfolio in the form of financial assets, which in turn reduces the risk and enhances the return for the investor. Hence, money market is beneficial for investor in handling portfolio management.